Nvidia just reported its earnings, and Wall Street is absolutely terrified. The numbers they dropped are completely insane. Revenue is up 85%. Their data center business literally doubled in size. Even CEO Jensen Huang admitted that we are witnessing the largest infrastructure expansion in human history. And yet, right after this historic announcement, Nvidia stock started dropping. Think about the mystery here. How can a tech giant pull in over $81 billion in a single quarter, completely crush every expectation, and still watch its stock price slide downward? What is Wall Street hiding from you, and where is this stock really headed in 2026? Stick around for the next 7 minutes because we are breaking down the hidden truth behind Nvidia, and this single revelation could completely save or break your portfolio this year. Before we uncover the dark reality of these numbers, smash that like button right now to support real data over hype. Subscribe to the channel so you never miss these premium breakdowns, and drop a comment below right now with the word buy or sell to let me know where you stand. Let us get straight into the hidden data. On May 20, 2026, Nvidia reported its Q1 financial results, and the sheer volume of money is staggering. Total revenue reached $81.62 billion. That is an 85% jump compared to the exact same time last year. To put that in perspective, Nvidia made more money in just 3 months than the annual gross domestic product of entire nations. But the real engine behind this money machine is the data center segment. This is where the elite AI chips live. Every single advanced AI system like ChatGPT, Gemini, and Meta AI runs exclusively on Nvidia hardware. Data center revenue alone skyrocketed to $75.2 billion, making up 92% of Nvidia's entire business. It did not just grow, it literally doubled. Jensen Huang confidently stated on the call that demand has gone completely parabolic because agentic AI has officially arrived. Here is the secret detail that regular retail investors always miss. Nvidia's gross margin held solid at 75%. This means for every $100 that comes in, Nvidia keeps $75 as pure profit before basic expenses. For a hardware company, that profit margin is mathematically exceptional. On top of that, they just raised their dividend by 25 times and announced a massive $80 billion stock buyback. The company has so much cash they are practically forcing it back into the hands of shareholders. On paper, this business looks completely invincible. So if the numbers are so perfect, why did the stock actually slide? This is the ultimate Wall Street psychological game, often called buying the rumor and selling the news. You see, institutional investors had set the expectations sky high before the report. Analysts officially predicted $78 billion, which Nvidia easily beat. But behind closed doors, whispers were demanding $85 or even $90 billion. When the hype is this extreme, even a historic victory can feel like a disappointment to greedy traders. The second reason is a major geopolitical warning sign: China. Nvidia openly revealed in their official guidance that they are assuming zero data center revenue from China moving forward. This means billions of dollars in future profits are now completely cut off due to strict United States export restrictions. Thirdly, investors were desperately looking for aggressive and confident commentary regarding Nvidia's next-generation architecture codenamed Vera Rubin. The statements they received were steady, but not aggressive enough to ignite a fresh buying frenzy. The stock drop did not happen because the business is failing. It happened because the impossible expectations were already priced into the stock. Despite the dip, the massive bull case for Nvidia remains incredibly strong. First, the global AI infrastructure boom is merely in its infancy. The 4 biggest tech superpowers, Google, Amazon, Microsoft, and Meta, are on track to spend nearly $700 billion combined on AI infrastructure this year alone. A massive percentage of that capital flows directly into Nvidia's pockets. Second, Nvidia currently faces zero real competition. They fiercely control 81% of the AI accelerator chip market. Competitors like AMD and Intel are spending billions to catch up, but they are miles behind, and by the time they get close, Nvidia will already be launching their next platform. Third, the shift toward agentic AI will change everything. Standard AI just answers questions, but agentic AI actually takes autonomous actions, managing operations and calendars without human intervention. This requires 10 times more raw computing power, and Nvidia is the only entity capable of supplying it. Finally, their Q2 guidance is projected at $91 billion, proving that this train is actually accelerating, not slowing down. But because this channel is dedicated to raw truth and not just market hype, you must understand the dangerous bear case before risking your capital. First is valuation. At these current heights, Nvidia trades at an extreme price-to-earnings ratio, meaning you are paying a massive premium today for growth that has to happen in the future. If that growth slows down even a fraction of a percent, the stock will crash hard. Second is the permanent loss of the China market, which leaves Nvidia heavily reliant on just a few domestic buyers. In fact, over 50% of their data center revenue comes from just a handful of hyperscalers like Microsoft and Meta. If even one of these giants decides to cut back on AI spending, Nvidia's revenue will take a direct and brutal hit. Lastly, long-term competition is inevitable. Google, Amazon, and AMD are designing their own custom silicon to break free from Nvidia's monopoly, and it is happening faster than you think. So what is the final, data-driven verdict? Should you buy, sell, or hold? For long-term investors, Nvidia is a solid hold and a strategic buy on the dips. If you already own shares, do not let short-term market panic force you into selling. The core fundamentals of $81 billion in revenue and an $80 billion buyback are elite. This is a generational play on human infrastructure. If you want to enter now, use dollar cost averaging. Buy a fixed, small amount every single month to balance out the wild price swings. If you are a short-term trader, step back with extreme caution. The options market was pricing in a massive 8 to 10% move, and unless you are a professional risk manager, short-term volatility here will wipe you out. Ultimately, Nvidia is not just a technology stock. It is a direct bet on the future of artificial intelligence, and right now, that future remains incredibly bright. Protect your capital, do your own deep research, and never invest money you cannot afford to lose. That concludes our premium breakdown of Nvidia's bombshell earnings. If this video brought genuine value to your financial journey, hit that like button right now and share this video with one friend who invests. Subscribe for more deep, data-driven financial videos every single week. Drop your thoughts in the comments section below. Are you buying, selling, or holding? I read every single comment. See you in the next video. Peace.